Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs and articles on ospreystrategic.org as well as StockCharts.com. So today I want to cover off some of the tools that you can use for reviewing the year end. And I think it's particularly helpful to just know where to find them and how to work through them. So I thought this would be a good way to start the year and make sure everybody's got themselves positioned for success. So we're going to find some tools for looking back in time, and we've got performance charts, performance tables, monthly charts, quarterly charts. Those are pro tools that are available, but I do want to show you the benefits of having that type of information. And then index chart lists, so making up a chart list of the S&P 500 or the Dow 30 and how to do that quickly. And then structuring your chart lists so that you can find them. And I think you'll find it pretty helpful. So then, if you like the work that we do or that I do, if you're interested, head over to ospreystrategic.org, and for just 1 month at $7 or $7 to go try it, you can check out everything on the website, all the historical, all of the information is there, and or there's an annual membership at just $860, which is less than $17 a week. And looking over here, we are doing a live webinar, and I'll get the link put in the show notes in the article for you. But it's Kickoff 2023 with a Better Plan. And this shows you exactly how at Osprey Strategic we approach the market, why I think it's different, how I think it's helpful. And hopefully it'll give you a chance to just have a 1 hour kind of overview, 45-minute overview of what we do, and hopefully see if there's a fit there for you. And on the website, we have award-winning technical analysis for you, weekly newsletters, videos. We just recorded a monthly conference call on January 3rd. Trade setups, every day we send them out, but we also include things like special indicators called the Schnell Strength Index. And they actually help us enter the market in a timely fashion and protect capital. And if you do think we're entering into a recession this year, it's pretty important to know when the market is trying to push higher and when the market is too weak to actually do that. And I think you'll find that these indicators help you solve that problem. So anyway, check the show notes for that. So what I want to start with is the perf charts, and many people don't know how to use them, but on the home page from StockCharts, this is my home page, but you can always go under charts and tools, and over here there's a lot of stuff, but here's perf charts. And if you go in here, here's predefined groups as an example, and you can do the sector ETFs or Canadian sectors. There's some pretty interesting stuff in there. But anyway, here's sector ETFs. And then what you would do from that, you can change the slider down here. And in here, you can right click on this box or double click on this box and pick 5 days. And that would just show you what's happened since December 27th to January 3rd. So we've got a couple of days from before New Year's and 1 day after New Year's, but you get the idea. You can move this around. Now, one of the things that I like to do, set this up as 252 days is typically 1 year of trading. And so when you look at that, that takes you back to January 3rd of 2022. And again, this is when you have this button to press, this is the when it's pressed down like this, you're comparing it against the S&P 500. So what outperformed the S&P 500 and what underperformed. But when you click on this and take it off, that shows you what actually, as an industry group, was up this year or for 2022. Now, that one of the reasons that investing is hard in a downtrend, as you can see, energy was the best performing group, but really it was 53% on the whole year. But I think if you go back and take it from a period like, mid-year or something like that, it was only up 16%. So most of the gain was in the first half of the year. And then energy kind of idled into the end of the year. 16% still isn't bad, but it was Exxon was just such a heavyweight there. But the other thing here is to go back and set this to 252 days or whatever. And I'm just moving the slider to control that down on the bottom. And then you can just grab this, and looking up at the top right hand corner, or left hand corner up here, you can just slide this along and look for year end of 2020 and going into 2021. And if you'd like to, you can use these little arrow keys to fine tune it. So here's December 30th to December 28th. So let's just stretch it out a little bit more and try to catch the whole year. Maybe we'll have to, there you go. So now we've got December 30th to December 31st. Real rough, that's going to give you what you want. But you can see in 2021, every sector was up. It really, everybody was making money. If you were in defensives, you were making money, not as much as you might have made if you were in some of the other areas. But by changing this slider, you can do quite well. And then to see what actually outperformed the S&P 500 that year, you just press this toggle. And that gives you a way to look and just check that out. So I think this slider is particularly interesting. You can use it on all kinds of groups. You can type in your own name. So if you wanted to just, check out copper stocks and something like this, BHP, Southern Copper, Tech Resources, it's pretty easy to just pound that in and then hit go. And then you can see what happened with that year. And it defaults to this line structure, but you just hit this button down here and that gives you your histogram. So it's refreshed now back to 200 days. So here's 250 again, 252. You can see it makes it pretty easy for moving around. Now, if we include the S&P 500 on here, probably want it at the beginning. $SPX Rio. There we go. And then hit go now. What that will allow you to do is get those same charts, but then you can see that the S&P 500 for this period of time, and we can again click this to 252, makes it easy. And that takes you back to January 3rd. Now, if you want to compare it to how the S&P did, you would toggle that button, and clearly the miners outperformed the S&P 500 over the last year. And then you would just grab this slider and change it, and that's probably close enough for me. But you can see that the year before, only 2 of the 6 outperformed the S&P 500. So coming off the COVID lows, we ran up into the vaccine day in November and then early December, and we had that big bull market in most of 2021. So you can slide this along, and then you can also slide it back and forth and play with it. But I think it just allows you to check out way more than you think. There's a lot of good things here. So anyway, don't be afraid to have that toggle set up, and you can just see, what charts outperformed in any given year. I think it's a helpful tool. Okay, so the other group that I'd like to cover off is these performance tables. And what are performance tables? Well, this is my group of stocks called the S&P 500. And you can just click on these tabs now, and it shows you the actual one-year performance. So going back exactly a year, what this is going to show you is which stocks were better. And I think we all know that most of them were the energy names. But here's Northrop Grumman in here. It was up 42% on the year. Lockheed Martin did pretty well. But those were kind of the highlight areas. And so if you have a large chart list, and again, you can either just scroll through here, but you could literally go down and just say, okay, so what were, how many stocks were positive on the year? And obviously quite a few. That was a pretty long scroll before we got down to the actual zero level. So even though it was a tough year, we had lots of stocks that still did very well over the year, and I must admit it was a choppy year for whatever. Even if you were in a Walmart, the chart bounced all over the place, so it was very hard to make any real money. I'm looking at this again, it was only up less than 1% on the year, and you lived through a roller coaster twice in order to make that 1%. So anyway, this is a helpful table, and the way you get there is right up at the top here. You go pick your chart list if you've got one made up, and I've got all kinds of chart lists, but rather than having it in summary view, which is the normal way to pull it up, and there you can add a whole bunch of columns. There's a gaggle of columns that you can have, but in this particular method, under performance, you can go here and quickly see what's going on, and again look through the groups and see which way they went. One of the things that I think you'll find is it's easy to set up those lists, and maybe nobody's shown you, so we're going to take 2 minutes and just show you how to do that very, very quickly. So as an example, we're just going to go to the home page as a member, and then go down to select a scan, and I'm going to just hit new. And what I want to do, let's say I want to refresh. I have a chart of the Dow stocks, and in those, here's my Dow 30 stocks, and I still have an old version with ExxonMobil in it. And of course, ExxonMobil got kicked out, and Salesforce got put in. So rather than going through and trying to retype the names or whatever, the other thing you can do is you can just go through this technical scan process. We're going to go down here and just say choose indexes. And this is a quick way to refresh all of them. You can go get all the current S&P 500 because you've had mergers, acquisitions, stocks drop out, all that kind of stuff. And same thing for the NASDAQ 100. But anyway, you go and get that. We're just going to add that to the scan, so it puts this one line up here. Now when we run this scan, it's going to give us some scan results, usually on a new tab. And so here I've got the current one, and of course this has Salesforce in it and does not have ExxonMobil. And now then I have a choice what to do, and I want to save this to a chart list, but I actually want to replace the old list, and I'm going to scroll down to my chart lists called Dow Industrial 30, and then by putting it in there, save it. Now I've also got a bookmark, view, show favorites, and here's I've got a tab for indexes, and if I go click on this, this will give me all the TSX stocks. So on any given day, I can just go and see what's the strongest stocks on the Toronto Stock Exchange, and what was really working. And you can see on whatever, January 3rd, it was all gold for the most part. Those names were doing very well. Precious metals kind of ruled the roost. And then I also have the NASDAQ and all that kind of stuff set up. But if you take and bookmark these, that makes it really easy to do a quick market view and start to see what's going on. And then you can also do, performance over the last 5 days, and just click on that 5-day performance and maybe see what types of stocks have been working lately. As Mark Haynes used to say, the church of what is working lately. And when we look through this list, obviously here's Lululemon. Sold off pretty hard, but it's now starting to turn back up again. And maybe, as an example, maybe that chart can continue to work its way higher. It's just really easy if you have these set up in advance. And again, I don't want you to go have to type them all, so I just want you to go use this technical scan and just choose whatever you want to see. So the NASDAQ 100, add that, and then we just have to get rid of this line that was the Dow 30, and you'd run that scan, and that sets you up. So rather than type all that stuff out, or if you want an industry group, you want to get all the current semiconductor stocks or anything like that, you would do the same thing. Just go, this was indexes, this is sectors and industries. And so as an example for technology, you'd scroll down here and you'd find semiconductors, and then you could run that scan and you could create a list of all the semiconductor stocks. So I don't want you to do a whole bunch of typing here, just run those scans and save them. And then for the actual chart lists, the way I have it designed is that I went and I made a header called 6010, and I just took some number that I would never accidentally type, and I have them divided up by all different groups. So here's a whole electric vehicles only, electric vehicle theme, food products for US and Canada, forestry stocks, gambling. And what I do is by putting this initial first, it helps. So as an example, for oil and gas, I can have oil and gas exploration, but I can also have oil and gas services, and I want them to be listed close together. So by putting that O in there, it allows me to kind of group them, if you will, and by having that group, that can really help me stay focused on exactly what I want to watch for. So exploration stocks sold off hard this week, and for a while, oil and gas services were doing well. Well, they got hit as well this week. So you can quickly go through by having chart lists all broken out. And again, I have hundreds of chart lists, but the point I want to make is that it's very easy to set these up without doing a lot of typing. So if you're waiting to see semiconductor stocks turn or software stocks turn or electric vehicle stocks turn, you want to have those chart lists already created so you don't have to go find all these stocks and type them in. Go grab them and work that way. So I think you'll find that quite helpful. Okay, so let's just get rid of some of those. And again, that was all done through the scan engine, which is you can get to it from your dashboard or from the charts and tools over here. It's down here on the home page. So just pick either a scan you've already got or run a new one. Okay, so we've done that. Now, the next thing that I wanted to talk about was the monthly charts. And one of the big benefits of monthly charts, and again, whether or not you're a pro member or not, the one thing I find is like the difference between basic and pro is so small. It gives me access to these charts. So this goes back to 1973. And the point I want to make is here is a PPO momentum indicator. And really, other than any time the stock market was in a severe correction, the PPO does not go below zero. But actually, what we can also see is it doesn't go much below 2% either. So we're currently sitting here with this PPO so low that it's okay to even say it's so low it's already in a major correction. But typically this gets a lot worse when we're this bad. And even the 80 to 82 recession, what happened there was the Fed came along and said we're going to knock down inflation, and he went at it hard for 2 years and drove the stock market down. So we've been at it roughly 1 year, and whether or not we think the Fed has control, we can just see that looking at this chart, we're in a situation that we have only been in 3 or 4 times. So we're currently in it. We were in it in '08, we were in it in '01, and we were in it in 1982, and again in 1975. But these were major stock market pullbacks, major recessions, and really changed the chart. And so by understanding this big picture, and a PPO lets you do that, then you can at least start to realize, the odds of this stock market going higher without something changing meaningfully is probably not a good expectation. So at least we can use it to ballast ourselves with history and go back and compare to where we were before. Now, the other thing you can do, that's 50 years of history, and obviously that's nice. But looking at a monthly chart of the S&P 500, we're below the 20-month moving average, and we've been stuck here for about 6 months. Now, when we look back on this chart just a little bit, so we'll just go back 25 years, and what happens in this period, obviously all of these ones where we dip below the 20-month moving average in here, the Fed came in and actually did something, quantitative easing or some sort of financial initiative to get it going. We don't have that Fed support now. So here we are in 2008, and it hovered around here for 4 or 5 months, and then it started to fall apart. In the tech boom in 2000, it went down, and it spent 4 or 5 months just under it, and then it actually started to push this Bollinger Band lower. There's also 2 other key changes on this chart. One is the moving average, the 20-month moving average actually rolling over. Happened in '01, happened in '08, and now it's happening now. So by having that big picture view, I'm not sure if I just convinced you that the $10 a month or whatever the difference is in stock charts, and I'm not trying to sell it for stock charts. I'm trying to sell it for you. If it's $10 a month to go get that information, how valuable is it? And again, in my conference call today, with clients, we went through and we went around the world, and I showed them the importance of the monthly chart and looked at some of the places from Asia and Australia and Europe. And by doing that, you get a real sense of what's happening. So I would encourage you to think about having longer term charts because they can really help you understand the condition of the market a lot better, especially during corrections. And then, so you can do monthly charts. The other thing that's an option up here after you've made that jump is you can go to quarterly, and I actually have some quarterly charts all set up, so I'll just go that way. But the idea here is to get a feel for where we are, and this isn't in log mode where the scale would get compressed on the right hand side. We could go do that. But the idea is to try and get a feel of how the market is changing, and obviously it makes it very easy to draw a quarterly trend line, and you can see when those trend lines are broken that's a pretty important place on the chart. Okay, I talked a bit about structuring the chart lists around having that special number at the front and all that kind of stuff. But the other thing I would encourage you to do is make a chart list for just dumping charts into. So this is my current one. It's only got 4 charts that I put in today, but this thing will run on, and by having these chart lists all previously set up, so here's all of the charts I did in 2022. And when I go look at this list, you can see I obviously looked at Bitcoin a lot, and basically every time I'm drawing on a chart, I'm saving it. But here's gold, and you can see numerous in there. I have chart lists that I go through every week that those are regular, but anytime I'm just glancing at something, here's Luna to the US dollar, and go look at that chart. Obviously, I'm not a huge crypto investor, but you can see NASDAQ, lots of different looks, and here's one with the elder candles or whatever. By having this junk drawer, what I find actually quite relaxing is to just go back and find different chart settings that I've used and maybe show me something particular, like here's the NASDAQ equal weight, and just see how that's working and compare those charts. So I'd encourage you to set that up, having those chart lists to just dump in, and probably you'll need one a year or whatever. I've got them all saved up all the way back to 2014, so I could go back and look at how I was thinking about the charts then, the type of indicators I used, and maybe things I learned from there. I want to end with the dynamic yield curve. And the reason is because you can take this yield curve and slide it along. And again, it's available under Charts and Tools. I'll just quickly go there. Charts and Tools on the right-hand side, dynamic yield curve. But the idea here is if you want to see what an inverted yield curve looks like, you can go back to the 2000 period. You can see there's the yield curve inverted, so the right side is lower than the left. And then you get to the bottom of the market and you end up with this steep yield curve. And then as you keep rolling through here, you can see how it changed, and it went inverted again, and then it went back to a steep yield curve, and now we come all the way through and we're back in this inverted yield curve. So you get an example of times in history where the market, as the bond market changes, if you don't understand all the discussion on TV, and one of the things I think is particularly important is not only does the yield curve has to start getting better, it typically gets to be one of the biggest, very steep yield curves as you get towards the low, and then the stock market really starts to improve. So there's some real learnings there that you can do by playing with the dynamic yield curve, and I think it's critical. Now, the one other way to use that is when you go over to the sector ETFs, down here is this model for how the market should rotate. So energy recently topped, I would say, and in a bear market, which is the orange, we should start to see financials kick it up and start to be a leadership group during the correction, and then we'll start to see technology, discretionary, and communication services pick it up as the stock market bottoms, even though we're still heading into a full recession. And again, the St. Louis Fed has came out with a report just recently that said we went into a recession roughly in November by their books, end of October. And so we're in some sort of a recession. So this is early recession, so financials should lead. And then as we get into the full recession, down here it tells you the stage of the yield curve, interest rates, what they're doing, industrial production should be bottoming out, consumer expectations. So you get a feel for how the economy is rolling, and what we want to try and do is be ready for moving where the puck is going. And in that case, we're starting to look for financials. So you want to have a chart list set up with financials, some ETFs that you can kind of look at quickly, go grab those, and be ready for that market rotation. And again, all of a sudden you should be able to look back at those perf charts, and instead of seeing the energy one being at the top of the bubble, maybe it's the financial sector that starts to actually outperform. So hopefully I've given you some tools to work with there. If you can, if you're interested, I'd appreciate you coming to listen in on our strategy session for kicking off 2023 with a better plan. It's no hard sell. I'm basically just showing you how we do things at Osprey Strategic with the hope that we can help make you some money and, more importantly, protect your capital. So with that, thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern Time. You can also see the recording on StockCharts TV YouTube page. Thanks, everybody. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.